Hello friends, we'll be discussing an illustration which will be related to the trading account preparation of non-manufacturing entities. Yes, when we talk about non-manufacturing entities, we'll start off with the trading account problem first. Now, when we speak about entities, we have two kind of entities with us. One is the manufacturing one, second is the non-manufacturing one, which we also call as sole proprietor trading accounts. So basically sole proprietor accounts, or this chapter will be completely related to financial accounts of sole proprietor. So what needs to be done, what are the kind of problems that you need to solve, how different it is from the preparation of final accounts of partnership firm or any kind of actual manufacturing entity. This all difference will be segregated and will be explained to you by preparation of all these problems. So the first problem that we are going to deal with is the preparation of trading account. So let's start with jotting down the problem first and then we'll explain you what the problem is all about. So let's start with the lining down problem now. Now, when we speak about the trading account, we have a phase one problem which has been mentioned down here. The reason why I've mentioned phase one is because this will only give you a part attraction, or rather part participle, or anything which is related to in phases. So the first phase here that we'll be figuring out is preparation of cost of goods sold. That means how to find out what is the cost of goods sold. Now, when you find the cost of goods sold, the next part will be the completion of trading account. So now that we are dealing with trading account problem specifically, we'll deal with every aspect of this trading account. So what we have mentioned down is a problem which is related only to the phase one of it. That means preparation of cost of goods sold, post which we'll be writing down the phase two problem in addition to this specific problem itself. So let's just first read out what we have mentioned as a problem of cost of goods sold. Now, the trial balance for the financial year 31st March 2017 for Messrs. Deepshika shows the following balances here. We have mentioned the particulars, that means what are the items that are considered, what is the debit and credit balance here. Let's start with the first part. Purchase and sale amounts to 10 lakh and 12 lakh. Purchase will be on the debit side, sales will be on the credit side. 10 lakh is the purchase, 12 lakh is the sales, which we have mentioned. Now, let's go on to the next part. Debtors and creditors. Debtors amounts to 5 lakh, creditors amounts to 4 lakh, which has been mentioned. I am referring to the amount balance, especially after mentioning all these details on the debit and credit side. That means if the item refers to have a debit balance, that will have that specific thing, and similarly on the credit side as well. Opening stock has been mentioned as 2 lakh rupees, which has been also mentioned because opening stock always has a debit balance and closing stock will have a credit balance here. Closing stock has been mentioned as 3 lakh rupees, which has been mentioned on the debit side though. So make sure that this thing is taken into consideration. Other expenses and income which has been mentioned has been also taken into consideration here. Expenses amounts to 7 lakh, income amount to 9 lakh, which is completely different from the sale perspective. That means this is the source of other income or other expenses that we have done apart from the daily expenses that we do. So this is something related to that. Fixed asset and long-term liability has been also mentioned. Fixed asset is 25 lakh, long-term liability is 6 lakh, which has been mentioned down there. Last part will be capital. Capital has a credit balance, total of that is 21 lakh. Now when we tally this debit and credit side, we give, or rather we get a tallied balance sheet, or rather tally trial balance of 52 lakhs each, both on the debit and credit side. They have also mentioned certain additional information in the question. Let's read it out. Creditors balance as on 1st of April 2016 has been mentioned here, which is 3 lakh rupees. That means if you can see the credit balance that was mentioned there was for financial year 2017. This opening balance for 2016 has been mentioned as 3 lakh and that was 4 lakh. That means there is an increase of 1 lakh in the liability here, or rather credit balance here. This is the additional information. Let us figure out how to make use of that thing. Next one is the requirement that we are supposed to do in this question. we are required to figure out or rather prepare the cost of goods sold and the amount that we have paid to the creditors. These two things is what they've mentioned here. So we'll start with the details of preparation for this phase 1 problem. Let's start with the calculation part. Now, when it comes to phase 1 problem, the first thing that we have done here is that we have calculated the cost of goods sold. Now, the ideal formula for calculating the cost of goods sold is opening stock add purchases add direct expenses less closing stock. This is the formula. After this formula has been mentioned, we understand that the basic concept is opening stock, in which we have to add the purchases, we have to add the direct expenses, and closing stock has to be subtracted, which will give you the cost of goods sold. Now, in this formula, or rather in this problem, we don't have to mention all of that completely. First, the reason being we don't have much information given, and on the basis of all the information that has been provided, we only required opening stock and purchases. The reason closing stock is not subtracted here because it has been already adjusted. If you can see, closing stock has been mentioned on the debit side. That means that much amount has been already subtracted from the purchases. So the purchase amount that we have here is the net purchase. Hence, closing stock has been mentioned on the debit side, else it would have been mentioned on the credit side. Had it been that it would have been mentioned on the credit side, that means we have to make that adjustment of subtracting it, and hence we don't have to subtract the closing stock here because purchase itself is the net purchase that we have. So this total purchases should be added to the opening stock, and that will give you the cost of goods sold. So in this problem, we have the cost of goods sold being 12 lakh rupees, which has been mentioned. Let me highlight those points for you. So your opening stock is 2 lakh rupees, which we have mentioned. Purchases refers to 10 lakh, which is the net amount. Let me just highlight that or put that in note. So the total of cost of goods sold that we have here is 12 lakh rupees. Now, what exactly do you mean by cost of goods sold is what is the cost of the sales done? That means if the cost, or rather if you're selling certain item, the item must have taken certain cost to prepare itself. That means if you're preparing a simple pen, like if this is the pen that you're preparing, to prepare this pen, there would have been certain costs that would have incurred. And after you add profit to that specific cost, that will be your sale price. So the difference between the sale price and the cost of goods sold is the profit that you have. That profit determines what is the margin that you have or what is the income that you will be generating after selling this pen. So if this pen is sold at for 10 rupees and the cost of making this pen itself is somewhere around 5 rupees, so the balance 5 rupees, that is 10 minus 5, that 5 rupees is your profit here. So the earlier 5 rupees, that means the cost that has been incurred is the cost of goods sold, is what we have to find out. So in this question, we have figured out that part, which is 12 lakh rupees. Now, the next part is to prepare certain other requirements of the problem. So let's start with that problem then. Now, the next problem, or rather the next part of this phase 1 problem, states about what is the amount that we have paid to the creditor. We will be starting off with the calculation of that. So let's begin the calculation, whereby we will determine what is the amount that we have paid in this financial year as the amount which is liable to be paid to the creditor. So let's start with that calculation then. Now, the second part of this specific phase 1 problem has been prepared. We were supposed to figure out how much amount we have paid to the creditor. That means we're supposed to prepare a creditor's account. So this is what we have prepared. If you remember, in the additional information, they had mentioned that the opening balance as of 1st of April for creditors was 3 lakh rupees. Since that has been mentioned here, we have taken that same amount here on the credit side. Now, the trial balance also showed the closing balance of creditor, which was 4 lakh rupees. As I had mentioned in the start of the problem, that means 1 lakh rupees has been increased here. So we have taken the closing balance on the debit side as well. Now, when it comes to creditors, creditors are basically the people who have lended certain money, or rather who have given certain goods to us. So basically, purchase which has been done, if I have done certain purchases on credit, that means that refers to the creditor's account. Or if I've taken certain loan, that won't come under creditor, but that will come under liability. Hence, that has a different account altogether. So creditors balance is something that I have taken the goods, I have used the services, but I'm yet to pay them for that goods, or rather for those services. So this thing refers to the purchase amount. Now, the purchase amount that was net here, we don't have to calculate the net purchases, we have to calculate the gross purchase. So the total purchase which was mentioned in the trial balance is 10 lakh rupees, in which you have to add the closing stock, because that is again the goods that you have. So total purchase here will be 13 lakh rupees, which has been mentioned, and that will be again on the credit side of creditors, because as you have seen that purchase account debit to creditors account is the entry that we have passed. So on the credit side of creditors here, that will be mentioned as by purchases total of 13 lakh. With this, we have got the balancing figure, or rather we'll be figuring out how much amount we are supposed to pay to them, or rather how much amount we have paid in the current financial year. So the total on the credit side is 16 lakh rupees, and the closing balance has been mentioned as 4 lakh. That means 4 lakh is yet to be paid here. So that has been mentioned down there. So if 16 lakh is there on the credit side, 4 lakh is there on the debit side, that means you subtract that much of amount, you get the amount which has been paid to the creditors for this financial year, which is 12 lakh rupees. So the phase 2 problem, or rather the phase 1 part 2 of it, whereby we had to figure out how much amount we have paid for the creditors, comes to 12 lakh rupees. Let us jot that down. So the same thing has been mentioned. Now, after you have understood what all details we have taken into incorporation, that means preparation of cost of goods sold or calculation of cost of goods sold and amount paid to the creditors. After this, now we'll move to the phase 2 of this specific problem. So let us jot down the problem first, and then we'll go ahead with the further explanation of it. Now, the phase 2 problem has been prepared here, or rather phase 2 details of the same problem has been mentioned. We have given a small trial balance, and we're supposed to pass, or rather prepare the trading account and pass the closing entries for Messrs. ABC Traders in their journal proper for financial year 31st March 2017. This is what they have mentioned, and according to that we have to go ahead and figure out what are the details. Now, what all things have been mentioned in this trial balance, or rather what all things have been mentioned in this format, let's figure out what exactly they have given. They've given opening inventory which amounts to 1 lakh rupees. Purchases, that refers to 6,72,000. Carriage inward, that refers to 30,000. Wages, that refers to 50,000. Sales, that amounts to 11 lakh rupees. Return inward, that is 1 lakh rupees. That means sales return. Return outwards, that amounts to 72,000. That means purchase return. Closing inventory has been mentioned as 2 lakh rupees. Now we have to prepare the trading account first, then we have to prepare the closing entries in the journal proper of Messrs. ABC Traders for 31st of March 2017. Now, with all these details given, let's prepare the trading account first of all. So as you can see in the books of Messrs. ABC Traders, the first requirement of preparing a trading account has been completed. If we can see that all these details have been taken from the details that were already provided in the question, like opening stock, purchases, returns, sales, closing stock, etc. Everything has been taken from the trial balance itself. Now, when we start with the opening stock, the first thing that we have mentioned on the debit side is the opening stock 1 lakh rupees. Now, the next part that we have mentioned is the net purchases. That means purchase less purchase returns, or return outwards. Outward is basically when you have the goods and you are sending them back. That means in that scenario, you must have purchased it. If there is certain deficit, or rather if there is certain defect in that specific good, you're sending them back. Hence the reason return outwards. Vice versa, return inwards happens only in sales. So purchase has been mentioned of which the purchase return has been subtracted. 6,72,000 is the total purchase that we have mentioned. Out of that, 72,000 has been subtracted as return outwards, and the net balance of purchases has been moved out. So that gives you a total of 6 lakh rupees. The next direct expenses that we have mentioned is to carriage inward, which has been mentioned again on the debit side of trading account, and the next part is wages, 50,000, which has been mentioned. So 30,000 for carriage inward, 50,000 for wages here has been mentioned as direct expenses. Now, with this, we have completed the debit side. The next part is to move on to the credit side. Now, on the credit side, we'll have very less items because maximum items are covered in the debit side, or rather on the debit side itself. So on the credit side, we have sales, out of which sales return will be subtracted. So total sales is 11 lakh, out of which return inwards 1 lakh has been subtracted. So the net sales that we have got is 10 lakh rupees, which has been mentioned in the outer column. The next part is closing stock here, which is mentioned as predefined 2 lakh rupees. Now, if you tally this whole trading account, the credit side is higher as compared to the debit side. Hence, the credit side total is 12 lakh, out of which all the expenses, all the opening stock, purchases, etc., whatever has been mentioned, if you subtract that, that gives you the total of gross profit that you have earned, which is 4,20,000 in this scenario. Now, if that is figured out, the next part then refers to 12 lakh, which is tallied trading account. That means trading account has been tallied here, and the gross profit that we have figured out is 4,20,000, which will be moved to the next part, that is preparation of the specific profit and loss account, but that will be the next scenario. We don't have to jump into that as of now. This sum was mainly related to preparation of trading account. Now we have to pass the closing entries. Closing entries refers to all the items that we have listed down here. How we have listed them? We have to mention them in a journal proper. Journal proper basically refers to the items which don't fall in any of the books. They fall in this category. So basically, which has no mother father related to anything of accounts will fall under this category of journal proper. So we'll prepare journal proper now, which is the last part of this illustration. So let's start with the preparation of journal proper then. Now, when it comes to journal proper, part preparation of all the entries that we have done has been mentioned here. The reason why trading account was prepared earlier is so that you can understand how these journal entries have been formed, or how exactly we have mentioned these journal entries. Let's start with the first entry that has been mentioned here. Return outwards account debit to purchases. If we can see that we have subtracted return outwards in the trading account, or purchase returns in the trading account from purchases, that is the same entry. Purchase account has debit balance. If you have to subtract it, purchase has to be mentioned on the credit side. That has been mentioned here, and whatever item you're subtracting has to be mentioned on the debit side. So we have mentioned that same entry here. Amount that has been subtracted here comes to 72,000, so accordingly it has been mentioned. The next part of the entry will refer to sales return being subtracted. Sales has a credit balance, hence if you transfer it to the debit side, that means you're subtracting certain amount from that. So sales account has been debited, and on the credit side it has been mentioned as sales return or return inwards. Amount has been mentioned as 1 lakh rupees. Now, apart from that, we have mentioned the next part of entry, that is sales account has been debited and trading account has been credited. That means this much of sales has happened, or the balance of sales after sales return has been moved to trading account credit side, which has been done here. So amount has been mentioned as 10 lakh rupees because 11 lakh was the total sales, out of which 1 lakh sales return has been subtracted. Balance left has been moved to trading account credit side. Similarly, on the trading account debit side, there were certain items that we had to mention, that may be something like opening stock, purchases, returns, wages, carriage inward, etc. That means opening stock, net purchases, carriage inward, and or rather we can talk about wages and sales has been mentioned here. So let's mention those things, or rather let's figure out that entry now. So as you can see, trading account has been debited. The next item that has been credited, or rather the first item that has been credited here, is the opening stock. Then is the purchase. Then is the wages. And the next one is the carriage inward. If you can see specifically for purchase, it has been mentioned as 6 lakh rupees. The reason being, opening balance of purchase was mentioned as 6,72,000, out of which 72,000 has been subtracted, being written outward. Whatever balance is left has been taken here as the net balance. So the total amount that has been mentioned on the debit side of trading account is 7,80,000. This can be also called as cost of goods sold. Yes, this thing, or rather composition of all these items, totally can be called as cost of goods sold. Make sure you remember this thing. Now the next item that has been mentioned here is the valuation of closing stock, which has been moved to trading account credit side, because after this thing, closing stock, or rather trading account credit side, will be completely done. Hence, what we have mentioned here is closing stock has been debited, trading account has been credited here with the amount of closing stock, that is 2 lakh rupees. Now with this, we have completed maximum entries. Let us just close down the whole trading account by passing the last two entries that we have to pass here, which we will define, or rather which will define the existence of trading account. That means gross profit entries. So the last two entries that we have passed here is the preparation of gross profit. We have figured out that the gross profit that was mentioned on the debit side of trading account, hence the entry that has been passed here is trading account debit to gross profit account. That amount was 4,20,000. This marks the closure of trading account here. After this entry, the entry that comes here is transfer of this gross profit to profit and loss account. Hence, this gross profit account has to be closed here. If in case it has been credited, to close this, you'll have to debit this. Hence, gross profit account will be debited and it will be moved to profit and loss credit side. Hence, profit and loss account will be credited with the same amount of 4,20,000. Now with this entry, we mark the closure of this specific sum, where we have understood how to go ahead with the preparation of trading account. But before that, we understood what we need to do when it comes to preparation of trading account. That means cost of goods sold and other items related to it. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.